On Wall Street, the Dow Jones Index plunged more than 500 points Monday, its worst single-day drop since September 2001. Stocks also posted big losses in markets around the world as investors tried to absorb the impact of the Lehman Brothers collapse and the forced sale of investment brokerage firm Merrill Lynch to Bank of America. Market analyst Hugh Johnson says the effects could be far-reaching.
This is not just a problem of Wall Street. This is a problem of Main Street. Everybody is caught up in this thing. Everybody is to some extent, financially hurt.
Some estimates peg losses since the housing crisis began at more than $500 billion. The fear among some economists is that the failure of two of the most respected financial institutions in the U.S. is just the tip of the iceberg. New York University Dean and economics professor Thomas Cooley says other financial institutions may be at risk.
There's AIG, the insurance giant, that's actually a very good business that's being threatened by one of its lines of business. And then there are banks like WaMu and Wachovia that are in serious trouble. And then there are many other smaller banks that are in serious trouble.
Many Americans say they're worried.
I'm just wondering if the federal government had anything to do with lowering the standards in the first place to allow everyone to have the American dream, which now is turning into the American nightmare.
I really think that something has to be done. I'm not sure whether it's the government or the private sector, but I think they both have to come together and come to a solution that's going to really help the economy.
President Bush says he understands their concerns. On Monday, he said his administration is working to reduce the impact on the broader economy by making loans available to struggling financial firms.
In the short run, adjustments in the financial markets can be painful, both for the people concerned about their investments and for the employees of the affected firms. In the long run, I'm confident that our capital markets are flexible and resilient and can deal with these adjustments.
In the meantime, Thomas Cooley says he expects more mergers and more takeovers before problems in the housing and credit markets subside.
The real challenge is restoring confidence in the financial system and beginning to restart mortgage markets and other loan markets. And that's the main concern at this point.
And in a sign that the investment industry is bracing for difficult times ahead, a group of 10 global banks and securities firms have pooled their money towards a $70 billion fund that companies can borrow from to deal with future credit shortages. Arcega, VOA News.